Welcome back. Bank of Indonesia highlights the slow pace of Indonesia's foreign debt growth in July 2020 by 0.1% year-on-year from 5.1% recorded in June 2020.
Bank of Indonesia highlights the slow pace of growth of Indonesia's foreign debt in July 2020 by 4.1% year-on-year from 5.1% recorded in June 2020. Head of the Central Bank's Communication Department, Oni Wijanarko, stated that the latest foreign debt is driven by a decline in private foreign debt growth amid the relatively stable growth of the government's external debt. He expounded that Indonesia's foreign debt position at the end of July 2020 was recorded at $409.7 billion, comprising the public sector, the government and central bank with $201.8 billion, and the private sector, including state-owned enterprises, $207.9 billion. In the same time, Wijanarko remarked that the government's foreign debt position at the end of July 2020 was recorded at $199 billion, or grew 2.3% year-on-year, which was contributed by the withdrawal of part of the commitment of multilateral institutions and the issuance of samurai bonds to meet financing requirements, including for handling the COVID-19 pandemic and the National Economic Recovery Program. From all sources for IDX Channel.
Indonesia's foreign debt continues to increase month by month. How big is current foreign debt and what are the components that cause increasing foreign debt? And let's move directly to the first graphic in today's graphic session. This is Indonesia's foreign debt. Indonesia recorded the highest foreign debt, as much as $410.2 billion in January 2020. As much as 410.2, and then Indonesia's recorded foreign debt as much as 388.9 in March 2020 as the lowest foreign debt compared to another month in 2020. And meantime, for July, Indonesia's recorded foreign debt as much as $409.7 billion. And head of the Communication Department of Bank of Indonesia, Oni Wijanarko, noted that the position of public sector external debt was $201.8 billion, or almost 3,000 trillion rupiah. Meanwhile, private external debt, including SOE, stood at $207.9 billion. Meantime, Indonesia's external debt growth in July 2020 was recorded at 4.1% year-on-year, slowing down compared to the previous month's growth of 5.1%. Even though Indonesia's external debt continues to grow, the structure of Indonesia's external debt is currently considered to be healthy. Based on the central bank's records, the ratio of Indonesia's external debt to GDP at the end of July 2020 was at 38.2%. So how is actually the allocation of Indonesia's foreign debt, especially government and central bank's debt? Let's see it on to the next graphic. This is the allocation of Indonesia's foreign debt, as much as 23.6% allocated for health and social services. Meantime, as much as 16.5% of the total foreign debt allocated for construction, 16.5% allocated for education services, financial and insurance services, 11.9%, and government administration, defense, and mandatory social security, as much as 11.8%. The central bank assesses that government's external debt is managed in a measured and prudent manner to support priority spending, specifically the health services sector and social activities. In other side, private external debt growth in July 2020 was recorded at 6.1% year-on-year, slower than the 8.3% growth in June 2020. Furthermore, the development of private sector foreign debt is influenced by the continued slowdown in the growth of non-financial institutions' corporate external debt and the contraction of external debt of financial institutions. Meantime, some of the largest debt sectors, reaching 77.2% of the private debt, are the financial services and insurance sector. And I'm sure that many of you are questioning why government's debt is still increasing, well highlighted in the next slide. This is the reasons for increased government foreign debt as much as $199 billion in July 2020, or grew by 2.3% year-on-year. Partial withdrawal of multilateral institutions' commitments and issuance of samurai bonds. The allocation will be divided into two main allocations. Two of them, or they are COVID-19 handling and national economy recovery program. And the government's debt in July 2020 grew 2.3% year-on-year, relatively stable as compared to the 2.1% growth in June 2020. The government claimed that increasing debt is in line with the government's needs in funding, especially amidst COVID-19 pandemic. But one of the interesting things is stated by chief economist of Bank Central Asia, David Sumual, that he said government's debt is over-financing. David explained that the government's policy to attract more debt at the beginning of the year to anticipate spending has been done for a long time to anticipate uncertainty in the financial market. However, the slow absorption of state spending is also not a new problem, and the government needs to be better at managing state spending. And viewers, government's debt issues is always interesting for public, but how is the response of economists to this latest issue? Let's see it through the next graphic. This is the statement of Peter Abdullah. He said that I always say only Indonesia has too much criticism in the widening deficit and soaring debt, because these are two things that we cannot avoid. Meantime, the next statement came from Didik J. Rahbini. He said that now that we are in a debt trap, we have to take debt to pay off debts. This is relatively heavy. Yeah, regarding this, Minister of Finance Sri Mulyani even clearly stated that Indonesia cannot just continue to rely on debt. She said that it is important to see all existing sources of state income. Therefore, the resources that come from domestic economic activities are very important. And for this, economists agree that state income from taxation is needed to be elevated. So the government needs to implement tax reform to improve compliance and tax base. And with such a huge value, of course, the government is expected to be able to manage debt levels well. Even if possible, the government must slowly reduce the level of debt so that the financial burden does not continue to grow. Stay tuned on Market Headlines because we'll be right back after the break.